Now, at the core of this kind of property story, the housing story, is going to be, in the case of a recession, who gets hit first. And of course, we have seen this resilience show up around the world in the higher income, the higher wealth brackets of specifically Europe. And if you start to see that case for recession, that this property sector woe is getting even worse, who gets hit first? Well, it's going to be the higher income anyway, which brings me to the first sector that gets hit as well. And that, of course, is luxury. Who better to talk about it than our next guest, Rachid Mohamed Rachid, the chairman of Valentino and the founder and chairman of Sara Investment Group, joins me right here on our Bloomberg TV studios. A pleasure to have you here right in person.
Thank you very much.
Let's talk with the macro here first. The future of luxury. We've seen this resilience, a lot of money, of course, coming in from China, from the Middle East. How long does that last?
Well, the reality, it have been, for the last few years, very resilient. I think last year, 2022, have been an exceptional year post the pandemic. We have seen luxury goods grow by 12 to 20%, depending how you treat the currency. But we came into 2023 with a prediction that luxury will probably grow 10%. We are seeing very strong signs that it will be much worse than what we expected. We have a number of factors at the moment which are impacting the market in a negative way. The American market is slowing down due to the reality that department stores are really in a suffering situation at the moment, plus the reality that spending is slowing down. The expectation that China will come into the market in a big way after the closure that they have suffered from in the last 2 years is not happening.
Yeah.
For many reasons people are aware of in terms of China and the economy inside of China. Despite the reality that Europe is still receiving a lot of tourists, but I think the spending of tourists is now becoming different. With the hike in the prices of airline and hotels, they are putting more money in experience and buying. Yeah. So all in all, we are going definitely to see in 23 a market which is less than 10% of growth. Yeah.
Well, that's really leading to your point about the slowdown you're seeing in luxury around the world, to consolidation with a lot of the American luxury names. We just had this major deal as well, I think, between Tapestry, another more consolidation between the parent companies, Kate Spade, Stuart Weitzman, et cetera. Is that a similar logic when it comes to the recent about 30% stake that Kering had taken in Valentino? Is it coming off of these worries?
Well, not exactly, because Mayhoola, the investor of Valentino, has the intention to be a long-term player in the luxury market. And it is very clear, as you said, that there is a trend towards consolidation because bigger and bigger companies are having much bigger influence at the moment. The reality, of course, is that this deal is going to open the door to both companies, Kering and Mayhoola, in a way that they can play a much bigger role in the future of luxury in the coming years. And I think for Mayhoola and for Valentino, we have achieved a significant growth through the last 10 years, but this is hopefully will continue for the next 10 years also in a different way, and we will be more and more a player in the luxury market. Yeah.
Well, Mayhoola, as you said, wants to have this kind of long-term presence in the luxury market. Do you then foresee some sort of investment going into Kering, going into Balmain, which you are the chairman of as well? Where is their next target, in your opinion?
Well, I think it is very clear that initially we wanted to have an IPO with Valentino because the intention of the IPO was to achieve a number of positive points. One is really to have more institutional arrangement in the company, attract even better talents. But at the same time, it was really an ability to grow and become a much bigger group. With the arrangement that we have at the moment through the deal that we have with Kering, that could happen by joining hands with Kering. And there is definitely an agreement that Mayhoola could and will become a shareholder in Kering in the long term. Of course, you know, Kering is very much a success story in development of the luxury in the last 2 decades. Yeah. They have done a fantastic job. They have amazing brands. They have a fantastic vision. They have a very, very strong leadership and a group. And I think Mayhoola will be very proud to join hands with them. Yeah.
So let's talk about this from the perspective of Kering here.
Yes.
Do you see them taking on an even bigger stake in Valentino? They, of course, have the option to do that until 2028.
Yes. Well, that's the intention. And in the meantime, we are going to have the time to discuss and to explore and to negotiate together even further investment between the two groups here. So the intention really is to get more integrated together, but at the same time to expand the horizon of the luxury investment, yeah.
So when you say the idea is to create this partnership and to expand to it, are we ultimately talking about a full takeover of Valentino down the line?
Well, it's possible because at the end of the day, it's a situation that is mutual because we also have the possibility of acquiring more shares in Kering, which is something that we put it very clearly in the agreement that we had between the two groups here.
Talk to us a little bit about who else they might partner with, for example. There's some speculation that perhaps Kering should partner with Richemont, of course, the parent company of Cartier as well. Do you see that happening?
Well, I know that Kering is a very, as I said, they have a vision, they have an intention to expand. I think the wish of Kering to join hands with Mayhoola into Valentino was a very clear indication of where they want to go because Valentino is today one of the most influential and the most prestigious brands existing to be able to grow in the future. What we have done with the brand in the last 10 years is amazing. I mean, we acquired the brands in 2020, 2012. It was almost less than 300 million. Today is 1.4 billion. It's really represent, the ultimate luxury of what haute couture and Italy can present.
Yeah.
This is attractive for Kering, and this is the kind really of expansion that they want to build for the future. When it comes to bigger acquisitions, as the one that you have mentioned, I mean, this is really something up to Kering what they want to decide. But I think a lot is happening in the luxury market because we have seen, as you said, growth over the 20 years, which have made this market one of the most attractive in the world. Yeah.
But you're being humble. Look, you're an expert in this stuff. You are an expert in the luxury business. We, of course, know it's Kering's decision. In your view, does it make strategic sense to have a partnership between a behemoth like Kering and Richemont?
Well, I think, this kind of mergers of any big identities, you cannot only take, the numbers and the brands and look at it. I think there is another element in the equation, which is the culture. And I think this is really up to the management of both groups to decide if this is something that will fit or it will not be the right fit for them in the future, yeah.
So talk to us then about the Balmain piece of this equation.
Yes.
If you start to see ultimately a potential full takeover of Valentino from Kering, where does Balmain stand in that equation?
Well, Mayhoola has a number of investments. We have Valentino, we have Balmain, we have Palzeleri, we have Bayman in Turkey. These are 4 big assets, and they're all behaving in a very successful way and growing. And we will continue to grow, and we will continue to have a much deeper involvement in the luxury luxury market. For that reason, I think Balmain will continue to grow. We acquired Balmain as a very, very special French brand, which is almost 75 years old, have a very, very distinctive DNA. It is a brand that is growing in many markets, especially in the United States and China at the moment. And we will continue to grow that brand to a much, much more influential place in fashion, yeah.
Lately, after its, I believe, debut in I want to say Milan, it dealt with a major robbery. What can you tell us about what was taken, where you expect those goods to go? Mm-hmm. Any insight you can give?
Well, this was in preparation for the fashion show that will be in Paris the day after tomorrow. And unfortunately, a robbery happened, moving, some of the pieces of the fashion presentation. But luckily, we have an amazing team of people who have been able to reproduce it. What it will happen with these pieces? Well, I don't know. I mean, some people might be very, very obsessed about having, Balmain pieces to the extent that they want to rob them. Yeah.
But what does, if you could put a number on the loss, what is that?
Well, it's probably 25% of the collection, yeah. But it have been reproduced, yeah.
A lot to digest, and you've hit it all. A pleasure to have you on the program. We thank you as always. Rachid Mohamed Rachid, the Sara Investment Group founder and chairman of both Valentino and Balmain, joining the program.